Welcome to TradeTheMBI.com. This is Jonas. Report is for the 30th. Well, we are sort of blocked up here at the 50% Morganachi lines right there. Not a surprise. We still have positive readings from a DOC standpoint. Here you can see the green rising above cyan, which is clean. We almost have the potential of cyan fading under red, which would be always a buy configuration. Little bit near extreme here, yellow readings on the extreme histogram, and we're not getting a real strong improvement from shakeout at this particular stage. So we've got that deep move that causes that bounce back, and slight improvement from the histogram, and it's not great. I think it becomes fairly simple. Above the 50% at 51.4850 near long. Below that, I think it's going to be more problematic because it wouldn't take much to see a turnaround, a fade of short-term buyers here, and uh, shorts picking up. You're going to create a spider effect, and that would be close to a DOC spread, which would be fairly weak. Wouldn't necessarily mean it's going to break down too much, but overall, things are still relatively blah. There's no new to cause any major upheaval. So it's just sort of that plugging along. You got to wait for new fund money to come in at the beginning of the month. That will help bolster things. The fact that lockup period has ended and that, so you'll have your buybacks, which should be enough to help sustain a lot of where things have been and cause them to kind of be propped up from there, and sort of becomes that baseline effect because we know that a lot of compensation is tied to where stock prices are at for individual companies. From a treasury standpoint, yield fading off a little bit, and again, I think this is really the story that tells you where money is going to go, and it's going to go into the market, because until yields reach where they need to be as far as where inflation and that is at, and we're not there. So as far as that goes, you're forced to put money into the market. It's the only place that you're going to get an effective return. The softening of oil, definitely not significant enough to make an impact, but it does cause a lack of acceleration in interest, or at least inflation from that standpoint, and that will be enough to at least create some bullishness, if you want to even call it that. I think it's just more or less helps currencies, particularly those not traded in dollars, because again, if you've got to buy oil in dollars, you've got to trade out your currency, and the more expensive that gets, the more you have to do, and that's what's caused the euro to bounce up from nearly the death spiral. And we knew they were going to defend it down at this area anyway because it gets into a critical spot, but Eurozone's got problems, and that's difficult because you've bifurcated. The Japanese yen is falling apart because they're just doing some even more crazy things than the Fed are doing. So you've got that whole split taking place, and it just again pushes everything back towards U.S. markets and the stability there. Gold, it's maybe in a little pause mode at this particular stage, but needless to say, it's going to continue to rise because the next set of inflation numbers that come out are going to be even higher than before. You can only massage it so much, but eventually it's going to get caught up. And I guess the theory being is if they don't win the election, then the real numbers will come out. If they do win that, then I'm sure they'll probably think of some other way to keep pushing it off. We always see these revisions, and that's been the new practice. Give a fake number and then come back and revise it the next month or 2 months later. No one's paying attention at that particular point. They're just looking for the headlines at the beginning of it. From a crypto standpoint, not a whole lot of activity, nothing really exciting happening there at this particular stage. NBI White still leading on those, so there's still potential for weakness, which not a surprise. Positive extremes, we expect them to fill. While nobody else does because they really don't have that. They're not paying attention. And of course, you'll have new indicators coming out for next month that will indicate all the wonderful things. And there are going to be some changes with the strategy programs because I've been working on those to make some adjustments. But 50K, pretty clear. And as long as you're above that 76%, and it's a pretty good range between the two, it's about 25 points at this particular stage, just between that 23% range. And from that standpoint, as long as you're above it, the bias is still long. So dips coming down are going to get bought up, and uh, that's just where it's at this particular stage. You can see him, Magenta still leading on all of this, hasn't changed at all. And we did get a little split at the start of the morning here between, and that's what we would be looking at the daily, the connection between those two. And then you get the reversal. That's usually a sign of weakness. And that's just a fade off. It just reset the shakeout. And so it can rebuild again. And if it does, it's going to break new highs. So pretty clean. When we flip over to 5K, you can see post market here, not a whole lot, but you can see at the end of the day, there was a nice, gotta click that on, there we go. Sliding back, you can see there was a big sell-off going to the end. They found where the stops were, cleared them. There wasn't that much, and that caused that immediate turnaround reaction right back up to the highs. And that's how beautiful that is when they do that. Doesn't take a whole lot, and they always wait until just after the close. It's perfect. Light action at that particular stage gives them the opportunity to just move that needle ever so slightly and trigger anyone who is long trying to click at the key support lines, and that's how they do it. So all in all, pretty good stuff. You can look for indicators to be coming out and be another exciting May. Have a good one though. Trade well. We'll talk to you later.